Hi everybody, welcome back to my channel. I'm Sherron, the Modern Savvy CPA. Today I want to talk to you guys about 4 tax myths that we need to stop believing. There are lots of things that are tax myths that are floating around because many people don't understand how their taxes work. I would say at least 85% of us don't understand how our taxes work, especially in America. Some you might hear from family, friends, or even social media influencers. They're big and telling you a hack in 10 seconds that you could learn to do on your tax myth. So I'm not saying that you should listen to those things. You should take everything with a grain of salt. And you should, when you're listening to that, that should just be your starting point of what an idea comes to you. If you hear something, you want to vet it and verify it with your tax CPA or a confident source on social media or a confident website that you're sure about, like the modernsavvycpa.com. So the first tax myth I want to talk to you guys about is that your tax refund that you receive is free money. Now, I know that loads of us love to get money back when we're filing our taxes. And some people receiving this money means that they've paid less in taxes. It's not true. On the contrary, it just actually means that you've overpaid the government throughout the last year of your taxes, and you're now getting back the balance that you've overpaid. So if you've withheld more money than you owe, or you are entitled to a refund. It does not mean that the government is giving you money. The government is just giving you the money that you paid them that's more than what you're supposed to. Now, I must say it's nice not to have to pay into at the end. And it's also nice to get a tax refund by overpaying, because some of us are really not good with our budgeting. And if that money was given to us in our paycheck, then we would have spent it. So it's kind of a savings for those people who are not really good at savings. The goal is definitely to get a zero tax bill or close to zero as possible. The second myth is that it's bad to be in a higher tax bracket. Now, this is the number one myth I hear from my clients all the time. I don't want to pay any taxes. So what do I do not to pay any taxes? So they come to me and they're like, okay, I have to pay taxes on $100,000. I'm going to spend that $100,000 so I don't have to pay taxes. Some people believe it's not worth it to move up in a tax bracket, as the government is going to take extra money out that you make in taxes. This is true, that the more profitable you are, the more successful you are in your business, that means you are going up in a tax bracket. You are going to end up paying more tax if you're making income. This is because the tax system in the United States is called a progressive tax system. You pay at the rate at certain rate. So for example, if your gross income is $50,000, while you fall into the 22% tax bracket for 2023 and 2024, you will be paying 22%. You won't be paying 22% of $50,000. Instead, you're going to pay 10% for the first $11,000. You're going to pay 12% for between $11,000 and $44,000, and then you're going to be paying 22% on the additional $5,000. So it's a progressive tax bracket. So you pay what it is for each bracket, and then there's an average of your marginal tax rate is called an average. Don't turn down the opportunity to raise your income because you're afraid of ending up to be in a higher tax bracket. Only that additional income will be in a higher tax bracket, not the income that you've had before. So that's a big myth. And for me, if you don't want to make that extra $100,000 and pay $30,000 of it and keep $70,000 in your pocket, then send it to me. I'll take the $100,000, I'll pay the $30,000, and I still get to keep $70,000 instead of spending it out on frivolous things so I don't have to pay the $30,000. Then you're going to be left with a big fat zero instead of $70,000. So I say 70 is better than zero. The third tax myth is staying in debt is good for tax reduction. You will be surprised that many people consider this a real thing. They stay in debt so that they get a tax deduction that'll lower their tax bill on things like mortgage interest, student loan interest, car loan interest. But this is not a smart move. You know, you want to be spending spending $1 just to save a quarter on taxes is not smart. So you don't want to, it's the opposite of smart. Like we've just talked about, spending $100 just to save 30 cents $30 does not make sense. You want to be able to keep your 70 cents instead of not having any money. So living in debt is not a great option for a tax benefit. You're more likely, and especially in today's interest rate, you'll end up paying more in interest than you're going to save in taxes. So if you have an opportunity to be able to become a little interest free with certain things, especially in today's time, then you take that opportunity, because in the long run, you are going to be spending more money than you're going to be saving in taxes. Number 4 is you can ignore your tax bill if you miss the deadline. You can ignore someone at the door and they'll eventually go away. But no matter how long you ignore Uncle Sam, the bill will never disappear. Instead, it comes with consequences, interest and penalties. And ignoring your tax bill is just about the worst thing you can do, because the IRS will charge you interest and penalties immediately. Even if you file an extension, you have to remember that filing an extension is an extension to file your taxes. So if your taxes are due April 15th, you extend it to October 15th, that's just to file your taxes. If you still owe tax, there will be penalties and interest on the amount that you owe. So when you're filing your extension, you want to make sure you have an estimate of how much you're going to owe and pay it at that time if there's anything. So you want to make sure that you're doing this and you're paying it with your extension, so you can avoid any late payment penalties or any type of things like that. If you cannot pay all of it at once, you want to apply for a payment plan as soon as possible, because the one thing the IRS does not like less than not paying your taxes is if you don't communicate with them. If they're sending you notices and you're not communicating and you're ignoring it, that's when they'll be forced to take action. If you like these tips that I'm giving to you, please like, subscribe, and comment to my channel, The Modern Savvy CPA, and continue to watch us so you can get additional tips on all things financial literacy, so you can live a financially fit life. Thank you so much for watching this video today. Comment below on what topic you would like for me to cover next, and I'll see you on the next video.